at the local currency, and we've had Fitch lifting the outlook for South Africa's credit rating to neutral from negative, saying that perhaps we could see an upgrade in the credit rating going forward if we do fix problems with unemployment that face the country, electricity, and of course infrastructure being one of those key elements as well.
Morning, Eleni. Well, certainly after that announcement, I wouldn't advise that anyone starts looking for a ratings upgrade anytime soon. But it certainly is positive for South Africa that the ratings outlook was changed from negative to stable, because negative outlooks are generally associated with a potential future downgrade in ratings. So certainly the fact that the outlook is now stable means that South Africa's credit rating is likely to remain unchanged over the medium term, and the rand seems to have reacted positively to that news as well. It had breached the 6.95 level, headed towards 7, but seems to have retraced its steps in the afternoon yesterday, and may partly be related to that announcement.
Vuyo, I spoke to Michael Keenan yesterday, your colleague at Standard Bank. He was talking about perhaps the rand breaching that 7 rand to the dollar level this week. Given the fact that Fitch has changed its outlook, credit outlook for South Africa, does that change the rand's outlook this week? And also keeping in mind that when we see what happened on the bond market last week, we saw quite an aggressive sell-off of 8 billion rand from foreigners.
Eleni, the outlook has changed slightly in the sense that we're now expecting the rand to sort of bump around in the 687 to 697 range for the remainder of this week. What we had been anticipating, or in the event that the MPC had cut rates, we would have expected additional inflows into the equity market, additional portfolio inflows. But since our base case remains that the Reserve Bank will not cut rates, and in fact recent data has been supportive of this stance, we think that the rand is just going to remain within that range with no major market moving news due this week besides the MPC.
And of course we also have mining production, and that's set to be released today. The previous reading for the month of October, 5.6% year on year, and of course we had the PMI number out yesterday, edging down slightly in December to 51.7 from 52.9. So we have had other economic data. Do you think that all of this is going to be taken into consideration when looking at the MPC?
Well, undoubtedly this data will be taken into consideration. The PMI reading yesterday was a disappointment. I'm sure you would have covered that market consensus had expected an increase to about 53.3 points, and in the event it actually dropped in the month. And significantly it was in key areas such as expected business conditions and new sales orders that you saw monthly declines. So that is certainly of concern when looking at the manufacturing sector outlook. As far as mining is concerned, we're also expecting that the rate of year-on-year increase in mining production would probably have eased in November. This is because the September number was 12% year-on-year, and that slowed to 5.6%, and we're expecting that it's unlikely that the sector was able to maintain significant momentum in November as well. So these are definitely factors that the MPC will take into consideration, but of course this is just 1 month's data, and it will be balanced against a whole range of other factors, and specifically looking at vehicle sales, for instance, which rose quite significantly in December. So on the whole, looking at all the data, we still believe that the MPC will keep rates on hold.